Hey everybody, what's going on? It is James here with Crypto Common Sense, and I decided to sit down today, September 21st, and shoot a bit of a market update video for you all. All right, so in this video, what I'm going to talk about is the state of the market. I'm going to talk about things that you should be aware of, and I'm going to talk about a cold hard reality that many people are still refusing to face. So let's start off with some fundamentals, and then we'll go into charts because we all know that I'm a technical trader. But let's talk about fundamentals for just a second. The fundamentals in the big pump in 2020 through 2021 was the federal government and its quantitative easing program. It was basically pouring gasoline on a fire, just doing everything it could to prop up the economy. And by doing that, doing things like stimulus packages, for example, and these gigantic unemployment packages. And not everybody understands this, so I'm just going to put it into perspective real quick. I got unemployment before. I was actually on unemployment before I became self-employed. And where I live at, the maximum you can draw per month was $1,000 a month. Now, the job that I left before I got unemployment, or was fired from more accurately, I was making about $85,000 a year. So I went from making $85,000 a year to about $12,000 a year in unemployment. During the pandemic, there were people making $30,000 and $40,000 a year on unemployment benefits, which is more than the average job pays in this area. So you had people who did not want to work, and rightfully so. Why would you want to work when you can make more not working? So then they start doing these stimulus packages where they're giving out thousands of dollars. I didn't get a stimulus check, but for those people that did, I have family members who don't make a lot of money, and so they qualified for the maximum benefits. And some of my family members got as much as $9,000 stimulus checks because they based it on the size of your family and your income, etc. So then you had all this money being put into the economy. Well, what do people do when they have extra money? They go out and spend it. If you've ever known anybody that sold cars, they'll tell you the best time to sell cars is right around tax refund time. Everybody gets these big tax refund checks, right? Especially lower income people who get these $3,000, $4,000, $5,000, $10,000 tax refunds, even though they don't actually pay taxes, which is a whole other tangent we won't go on, right? They get these big refund checks, and then they come into the dealerships and they buy cars. They put these big down payments down so they can get affordable payments, or they just pay cash. Well, that's essentially what was going on all of 2021 was people were getting, in 2020, people were getting these free checks, these free handouts that weren't free at all because now we're going to pay them back 10 times over. But they were getting those, and it was creating massive demand. Well, what happens with demand? You have more demand and less supply, prices go up. What is that called? That is called inflation. That is literally why we have the highest inflation than we've had in 40 plus years. So that's how inflation goes about. So that's, quantitative easing, whatever you want to call it, it's happening. Well, then next thing you know, hey, inflation's out of control. We've got to get this, horse back in the barn. Well, how do they do that? Well, they've got to create deflation. Deflation is where prices start going back down. Well, how do you create deflation? Well, you create deflation by lowering the demand. Well, how do you lower the demand? And this is what nobody wants to talk about. You do that by making sure people have less money. How do you do that? Well, let's just talk about a couple examples of how you might do that. Well, if you stop giving out handouts, for one, right? That's an obvious thing. You stop propping up the markets. Markets are crashing. People have less money. They're less apt to spend money. That's going to take away the demand. You raise interest rates. What happens when you raise interest rates? Money becomes more expensive. Capital becomes more expensive. And as capital dries up and loans dry up, what happens? Well, people have less money. Companies have less money. People make less money. Profits in companies are going down. What happens when profits in companies go down? Well, share prices are supposed to be based on profits, not, hope and whatever. All the FOMO took these stock prices to ridiculous heights. Well, now reality is setting in. It's supposed to be based on profits. Well, if a company is making less profits, its stock prices go down. The market goes down further. Companies are making less profits. That means they can't pay all their employees. What do? They start laying people off. Well, now people are getting laid off. What people who are getting laid off do? Well, they have less money, so they're spending less money. What does that do? That takes demand down. It's a big old house of cards. It's like one big cycle. Everything is like a snowball effect, and it gets worse and worse, and it rolls downhill. And so as unemployment goes up, as less people have jobs, There's less money being spent. Markets are going down. Equities are going down. Crypto's going down. All that's happening. And then on the other side of the coin, we are still dealing with this historic inflation because, yes, some goods are going to come down. The cost of goods like what I would call discretionary spending goods, maybe televisions, maybe things like fancy shoes, right? And I'm using shoes as an example because I went and bought shoes the other day and a lot of shoes were 70% off. So you'll see things that are non-essential come down in price because the demand is just not there. This because people are allotting their income to the absolute essentials. Unfortunately, that means a lot of times you will not see the essentials come down in price. You will not see groceries suddenly get super cheap again. That's not typically what you see. And so people are strapped for cash. You look at gasoline, gas, some people are celebrating, oh, gas is down to 3 something a gallon. Yeah, well, it was 2 something last year, so why are we celebrating? Oil's cheaper than it was in February, but gas isn't. So what's going on there? Right? It's a whole big picture. And then you look at things like what's going on in Europe right now. Energy prices are through the roof. I'm seeing stories of people whose utility bills have went up 400% and 500%. Well, guess what? Those people, especially if you're American, you need to pay attention to this. Those people, they exist too. They also influence the market. Just because you're not paying more for your electric bill, if other people around the globe are, that all influences the market, especially markets like cryptocurrency. Those people may not be able to hold on to crypto even if they want to. They may have to sell their Bitcoin in order to, guess what? Heat their homes during the winter, okay? There is so much going on fundamentally that even if you didn't know a thing about charts, hard for me to fathom how anybody can look at this and still be out there telling people, buy Bitcoin. I could be wrong. I could absolutely be wrong. I take that. I accept that. I don't have a crystal ball. I'm just saying that fundamentally and technically, there is no reason for anybody to be screaming buy Bitcoin right now. Bit of a tangent, but it's just like people don't get it, right? They just don't get it. They do not understand what's going on. They buy into the drama, they buy into the hype. And at this point, if anybody's still buying into the hype that Bitcoin is a store of value, I'm sorry, you deserve to lose your money. It's been proven time and time again. It's not a store of value. I screamed it all through 2020 and 2021. People didn't want to listen. People got mad at me for saying it. Fine. I understand it. It was going up, up, up. It looked like maybe it was feasible. But now you can't say that. You can't say it's a store of value when Bitcoin is down 60 and 70%. And it was supposed to be the thing that you put your money into so that it was safe. Meanwhile, the dollar is soaring, right? The dollar is going crazy high. And Bitcoin's going crazy low. Exact opposite of what's supposed to be happening right now. Okay, so let's just take a look at some charts and we'll kind of go from there. First, we're going to jump over to Tradingview. This is a post I made back in May. For those of you that don't know this, you can't change these posts. One thing about Tradingview that I really like is when you make one of these posts, it's permanent. You can't delete it. You can't edit it. You can't do anything to it. You can add comments, right? I can go down here and update this idea. It'll add a comment down there, but I can't change anything that I've already posted. So this is where price was back then, around $30,500. Of course, I had said, way back in November, I had posted this stuff and I just finally added it to Tradingview in May. Well, let's click the play button. Hey, look at that. We're in distribution. We're now in phase E, if I had to guess, of distribution. And this thing is poised to go much lower. So let's talk about that. Let's get away from the daily chart. Let's just look at a bigger picture because the video is already fairly long. So we'll load a weekly chart of Bitcoin. What do you say to this, right? It is putting in some kind of range right here. So we could get, if the stock market allowed it, we could get some kind of dead cat bounce back up, right, to try to trap people in. It could be that we're at this point here, just in the phase E, where you get the pump, trap people, and then move down. But I would be very, very cautious about trying to get into any new bull trends, right? If you want to take a bull scalp or a bull swing, I don't think there's anything wrong with that. I'm not saying right now, this exact moment. I'm saying in general, if you find those opportunities, there's nothing wrong with taking them. I'm saying don't fall in love with it and think that we're suddenly going to $100,000 Bitcoin just because it might pump $5,000 or $10,000. And again, I think that's heavily dependent on what the stock market does. It's shown an almost 100% correlation to the US 100, right? So there you have it. All along, I said that I thought it needed to come back up and retest the 19-week moving average. Unfortunately, it didn't do what I was hoping, which was come back and retest it back here around 40K. It just kept going down, and this is kind of like a very close retest here. So 19-week moving average, it's a really easy line in the sand. It doesn't work on all assets. For some reason, it works on Bitcoin, right? It's really a Bitcoin thing. Works very, very well on Bitcoin. So you can keep an eye on that. If we start, putting in closes above it, then hey, maybe I change my mind. Maybe this becomes a double bottom. Maybe it ends up doing something like this. Maybe this becomes support, it comes down, and then we get something like this. Could be, right? Could be. I'm open to all possibilities, but it has to do it first. I am going to jump over to a daily chart real quick just to show you all like how clean this has actually been. There's nothing been, abnormal about this drop. It's not like these are surprises, right? We had all these lines mocked up. This chart has several things on it from, many months ago. This was the upward channel that I used to talk about when we broke south of it. I said, hey, it's very bearish. This was the bear channel I talked about, had a target down around, I believe it was $12,000. Target around $12,100. We're still in that. We're still moving toward that target, right? Moved down here, had this big move, flagpole, if you will, had the flag and then broke out of it. Here's a bearish retest of that flag, also a bearish retest of that 50-day moving average. So again, this bigger flag target down around 12K, smaller flag, you could say it has a target down around right around 11K. I think both those targets will eventually be hit. I have very little doubt about that. But as Mark Twain used to say, it's not what you don't know that gets you into trouble. It's what you know for sure that just ain't so. So you got to be careful. Even being, as confident as I am still open to the possibility that I am wrong. Okay. So that's the technical analysis on Bitcoin. It's very simple. Here's a 4-hour chart of Bitcoin. This was today's price action. Started to move up. Then, of course, the Fed came out and said, hey, we're raising interest rates. And right back down she goes. Why? Well, again, almost 100% correlation to the U.S. stock market. This is the U.S. 100. And if we put this side by side with Bitcoin, that's a 5-minute chart just to show you how crazy this is. Hey, look at that. Looks very similar, don't it? Yeah. Bitcoin is another tech asset, which I said for a very long time. If you want to trade Bitcoin, I think it is extremely important you also keep an eye on the US 100 and are aware of what the US 100 is doing. Speaking of the US 100, let's take a look at one more chart real quick. We'll look at our market cycle chart. This was a chart that I first posted up in 2021, right? I said that we were probably in complacency. And of course, some people enjoyed the chart, some people appreciate the chart, and other people just talk shit because they said you can't draw charts and can't do this, and that this November was actually higher than this back here, and blah blah blah. I was an idiot, and yeah, not so much, right? So this is how that chart looks now. You got your disbelief, you had your whole cycle, you had your complacency. I thought this was anxiety back here, and that we would probably get a denial bounce here. I am starting to wonder a bit if maybe this was not anxiety. Starting to wonder a bit if maybe, just maybe, and this down here was actually anxiety. In which case, we still are due a nice denial bounce. Maybe it could move down here, maybe then get that really nice bounce to trap people. We'll just have to wait and see. But overall, I mean, unfortunately at this point, the bulk of this move, has played out. And I'm not saying it can't go much lower. I think it is going to go lower. I think it's going to go much lower. But what I'm saying is really back here is where you had the huge edge. Back here is where you could sell and have a decent stop loss with a massive upside potential. You start selling through here, and the problem is where do you put your stop loss? That's really the problem with trading. When you miss the trade, getting in late is sometimes a terrible idea, even if you're right, because there are bound to be shakeouts along the way. Up here, much less likely to get a shakeout. Up here, this was a pivot. This was an obvious or felt like an obvious turning point in the market. Down here, not so much. This could easily go up, have 50%, even 100% pumps, and still continue moving down. That's what's brutal about being late. And it's really what wrecks people is they miss the trade, and then they want to get in the trade late. Or what I see a lot of times, and what I used to struggle with when I was early in my trading career, was I would see a trade, I would understand that I should take the trade, but I would be fearful to take the trade, so I would skip it. And then once it started going my way, then I would jump in the trade. Well, then my risk reward was completely skewed, right? And I was risking a lot more while making a lot less, and that's a really good way to go broke. So one thing I will say is if you miss a trade, best thing to do is wait for another trade. Don't try to get in late. It very rarely works out, and when it does, over the long term, a lot of times you'll find out you don't have an edge at all. You're actually losing money. But all that being said, if you're a trader, a real trader who understands technical analysis and understands how to trade, none of this stuff really matters anyway. It doesn't matter whether Bitcoin's going to 10,000 or 5,000 or whether it's going to 50,000, because if you're a real trader, you're in there, you're making money. You're making money on the moves. You don't care. You are trading smaller time frames when the market's like this. You go into, here's a great example. So this was a trade that I had posted up in my Discord. I missed the entry, so I didn't take it. And I told him I didn't take it. I said, I missed this. We'll see how it goes. I think I said something along the lines, I may be glad I missed it. We'll see. But it was actually a trade that I was looking for at least a 3-to-1 on. And it looked like this. And yeah, it went down over here, but guess what? It would have already hit the profit target. I just didn't get it. I got distracted. I was doing a few things at once and I missed it. So when this candle closed, I missed the entry. And when I saw it, it was like right about here. And again, I don't chase trades. If I miss it, I just wait for the next one. But, you know, say you're somebody who's doing this and you're risking, I don't know, $300 when you trade, right? If you're wrong, you lose $300. Well, that would have been a $900 payday. I don't know about you, but that's a pretty good payday, right? Or you're risking $100, could have made $100 there. How hard is it to just do that every day? Like on a 1 hour chart or a 15-minute chart or a 5-minute chart. There's just trades in all these different time frames and trades in all these different charts. You know, for example, like this is pretty choppy through here. This trade here would have been pretty choppy, and this trade here, oh, that's a good trade there. Like here you go, perfect example, right? Somebody using my Racing Rabbit indicator and using the default settings of 4102, right? They could have got short here, could have put their stop loss right there, would have given them a little over 0.5% stop, could have went for a little 2-to-1 scalp. There you go, they made money, boom, done, right? Over here, same thing. Could have got long on this candlestick, could have put the stop right there at that pivot. Was it 2-to-1? No, I think that one would have lost. Where's it at? And would have got clipped right there. That's trading, right? But you go back and look, here's another one here. So that was this candle. Not sure if that one would have worked out either, honestly. No, I think that would have got clipped. Nope, I was wrong. 2-to-1, boom. Right, here's one back here. Put it back there at that last pivot. Boom, win, right? Just so on and so forth. You just, you know, trading is trading. You don't really care. It doesn't matter that whether we're in a recession or not in a recession, when you can just go in here and pop, 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 you know, just take from the market every day. And by the way, those are super simplistic trades there. There's actually more advanced stuff that I teach, because I'm not really a big fan of doing 2-to-1 anymore. I like trying to find trades where I can get 5-to-1 or 10-to-1, etc. But, you know, there's just lots of ways to skin a cat, and there's no reason to sit and stress about, you know, where Bitcoin's going to be at 6 months from now or a year from now. I don't understand so many people in this market, and I think it's why I don't resonate with that many people. It's why the channel has stayed fairly small, is because I refuse to be a guy that just sits and shills Bitcoin or shills crypto and, you know, grows my following to hundreds of thousands of people while taking people right off the cliff. I refuse to do it. You have people like Michael Saylor. I don't understand why anybody would follow Michael Saylor. First off, looking at his history of fraud, I'm not going to say too much about that. I don't feel like getting sued. I'll just tell you, for your own safety, you should do your own due diligence on Michael Saylor and who he is and his history, right? This is MicroStrategy, of course, the company that he's, whatever he was, I think they asked him to step down or whatever. This was his stock back in 2000, crashed 99.9%. Later it came out that there could be some fraud involved. He was actually pursued by the SEC, I believe it was. I believe he paid a big fat fine for that. And then he realized, hey, I can, you know, get all these little cult-like people to follow me if I start talking about Bitcoin. He did the same thing. Found his whole new, you know, way to go about things. Pumped his stock straight up. And then, of course, his stock is right back down. I saw an article this week saying that he thinks Bitcoin could go back to $60,000. Well, don't listen to what he says. Pay attention to what he does. Okay, he bought 7,000 Bitcoin, around $60,000. So that's a very hefty investment. It's about $420 million. So this guy is still talking about Bitcoin now, still saying he thinks it's going to go up to the moon, blah, blah, blah. Well, talk is cheap. He just bought 301 Bitcoin at, what, around 19K, we'll say. You seeing the problem? So when Bitcoin was $60,000, he was throwing in $420 million. But when Bitcoin is down around $19,000, they're throwing in around like 5 or 6 million. We'll call it 6. Now, if you are still a big believer in Bitcoin and you're not just trying to get people to invest to get you out of your investment, wouldn't you be buying more Bitcoin the cheaper it gets, not less? The way cost averaging works, the way dollar cost averaging works, is you put in the same amount of money at every price point. So if you put 420 million in at 60,000, you put 420 million in at 19,000, and that averages down your position. What you don't do in cost averaging is put in smaller amounts of money the lower it goes. That's not how that works. It's the exact opposite. This is the exact opposite behavior of somebody who truly believes an asset is bound to go back up. That's not in any way reality. That is more of a, I'm going to throw a little punt on this, and hopefully other people will pick it up. Hopefully the media picks it up, which they did, and hopefully I can get some people to start buying Bitcoin, because from the reports, their cost average on their Bitcoin is around $30,000 per Bitcoin. So they need this thing to pump over 50% just to get out for even. In other words, they need liquidity. You're going to see more and more of this, and you got to be really careful of this, because the media is not your friend. The media are making money. They're being paid to run articles. So when you start seeing companies that are, making these weird claims that seem to be aimed at pumping their stock, you might want to be very mindful of, is this an exit pump, right? Because that's literally what they do. They create liquidity so that they can get out of positions, because they can't just click a sell button like you or I. They have too much. They have to basically get the market off sides. They have to get enough people willing to take the opposite side of the trade from them. So yeah, look at this. MicroStrategy crashed 89.8%. So all these people back here buying it at $1,300, who knows if they'll ever get their money back? Who knows? It's sad. It's ridiculous, and it's sad is what it is. So anyway, that's my market update video. It's bearish, 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 with the potential of a small dead cat bounce, and this turns into a double bottom. That's what I think. That being said, please remember, I'm some guy. I'm still just some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed and qualified financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed this video, give it a thumbs up, subscribe to the channel, and make sure you check the description. There will be links down there where you can join my paid trading programs, as well as get access to my paid trading indicators, which could help you with your trading. This is James with Crypto Common Sense, reminding you all to please trade safe, and I'll talk to you soon.